You're live.
Hello, everybody. It's Michele Brandt here with Fairway Mortgage. Hope you're all doing well. Happy Monday. This is our first attempt at a live webinar. Hope you find some value in it, and please feel free to fire away questions. This session is meant for you, our viewers. So I thought I'd spend a few moments today just talking about the home buying process in general, pre-approval, what that means, different types of loans, and just give a very, very broad overview of the process. Again, if you have questions, feel free to join along. Thank you for those folks that have joined us already. So the pre-approval step is the very first thing that you need to do. It's a pretty easy, straightforward process. It does involve a couple of steps just to make sure that you know exactly what you're getting yourself into before you start to go and look at properties, because that's important that you know what you're doing. So the very first thing you do is a loan application, just kind of all about you financially on 4 sheets of paper. You can do that online on a website. You can do it through our mobile app, or of course we can take that over the phone or face-to-face. Once we get your application, we pull a credit report, make sure that looks accurate, and then we request a few documents. When we have the documents in, we review them and make sure that everything looks good, and then schedule that pre-approval call. And that's really just a chance for us to understand and educate you on exactly what you qualify for. So, we can talk till we're blue in the face about a VA loan, but if you're not a veteran, you don't have VA loan capabilities, so why spend time talking about it? So we spend a bunch of time just educating you on what best loans are suited for you and go through that. Once you have the pre-approval in place, you will then go meet with your realtor and go look at houses, kind of the fun part of the process. When you get more serious about writing an offer, we'll connect again to get you payment information, down payment information, so that you know what that is, and we'll get you educated and off to the steps of making that offer. Making the offer, you'll negotiate that offer with your real estate agent, and then we'll go through the process of your file. So that part is actually pretty easy. It's just really important that we get the upfront steps going so that you understand what it looks like. When you're looking at mortgages, just a quick update on the different kinds of mortgages that are available. So you've got 2 big buckets of money to kind of borrow from. You've got your conventional financing, and then you've got your government loans. And both of them have good, bad, and ugly associated with them. So with conventional loans, your minimum down payment is just 3%. Typically with conventional, the higher your credit score rating, the better your rates and terms and fees and all of that are. So with conventional, you definitely want to make sure that you've got a pretty decent credit score, especially with those lower down payments, because that is going to make a pretty big difference. So conventionally, you've got 3% down. You will pay conventional mortgage insurance if you have less than 20% down. Conventional mortgage insurance does absolutely nothing for you as the buyer, unfortunately, or borrower. It protects the lender so that if you were to default on your mortgage, we file a claim as the lender with that mortgage insurance company to be made whole. It is something that you have to pay for if you have less than 20% down, but the nice thing with conventional mortgage insurance is that it's not permanent, so you don't have to pay it forever. You pay it for a little while until you reach that 20% equity, and then it drops off. So that's conventional financing. Again, better credit scores equals better terms equals better interest rates. The conventional mortgage insurance is something you'll have. Also, the property can be just a little bit more distressed with conventional financing. So you do not need to have such a turnkey move-in ready type of home. Alternatively, the other side with conventional is the government type of loans. And those 3 options with government loans are FHA, VA, and USDA. FHA is the most popular. I'll save that one till the end. So VA is if you and your spouse are veterans, you qualify for a VA loan. It's the best loan you can get out there. It's the 0 down, so no down payment required, and no mortgage insurance. So it's a great loan for our veterans, just to help assist them in the home buying. So they don't need any cash down, and there is no mortgage insurance, but you do have to be a veteran. The other loan type that's not as popular, but is also certainly a very valid option to consider, is a USDA loan, or Rural Development Loan is what it's called. That is another 0 down program, but there are further restrictions, and those are income and geographic. So you have to buy in a certain area and you have to make under a certain amount of money depending on the area that you're buying in. It is a zero down program. They do have a type of mortgage insurance. It's called a guarantee fee. The negative to that program, other than its restrictions, is that it requires you to have that permanent guarantee fee. So the mortgage insurance, unlike conventional loans, that doesn't drop off. That's also the same for an FHA loan, which is a 3.5% down payment, by far and above the most popular. A lot of folks think, though, that FHA is a first-time home buyer requirement. It's not. A lot of folks do an FHA loan that aren't first-time home buyers. You can do FHA loans over and over and over again. You can only have one FHA loan at a time, but you can certainly own a home with an FHA loan, sell that, and rebuy another home with an FHA mortgage. So 3.5% is your down payment minimum requirement. You can certainly put down more. 30-year fixed is the most popular option, but we do have a 15-year fixed as well as an adjustable rate mortgage as well. So we do have a lot of different programs with that. The nice thing about an FHA loan is that it does open up some parameters for qualifications. So it's a little easier to get an FHA loan. You can have a little lower credit score. 600 is the minimum that we're looking for at Fairway Mortgage, but there are other companies that go a little bit lower. It's just the rates aren't as favorable. The mortgage insurance rate is the same for everyone across the board. So if you're sitting at a 600 or a 620 credit score, you're going to get the same mortgage insurance rate as that of a 700 or an 800 credit score buyer. For that reason, it's really nice when you don't have ideal credit to get into an FHA loan. They also have tighter or more loose, I should say, debt to income restrictions. And so that is your gross income divided by all of the debts that show up on your credit report plus your house payment, your new house payment. So you can get into a little bit more house with an FHA mortgage. So it's just a little bit looser guidelines. It is backed by the federal government, so that's who the mortgage insurance company is, if you will, versus a conventional private mortgage insurance company. So 3.5% down payment. With the government loans, we do need you to have a little bit of a better property. So the biggest rule with FHA appraisals is if the property was built prior to 1978, we need to make sure there isn't any interior or exterior peeling paint. That's a huge one. And in the state of Minnesota, where we are, you can't always get that fixed in the middle of the winter months, so we can escrow and remedy that without any issue. Alternatively, so those are the main programs, I suppose, I should say. The Cliff's Notes version or broad overview of all the different kinds of loans. Of course, we can also layer that with down payment assistance. You do not need to be a first-time home buyer if you want to buy a house and use the down payment assistance programs. And the state of Minnesota has programs with availability of up to $15,000. So, hi, Michele. Thanks for joining us, everybody. And if you do have a question, again, feel free to write a comment or ask a question, and I'll be sure to answer it. So with regards to down payment assistance, there's up to $15,000 in available. No need to be a first-time home buyer. You live in the state of Minnesota, buy in the state of Minnesota, and you just meet the income and eligibility guidelines with regards to credit scores and debt to income requirements. Fairway Mortgage, the Elk River branch, and myself, I'm a gold member of the Minnesota Housing Finance Agency. And so it's really, so I know the programs really well and can help guide through the process with that, whether it's your first time buying or not. Let's see, what else could we cover today in a nutshell? We are about 10 minutes into our live presentation, and clearly I've had enough coffee to talk fast today. Let's see. Yeah, I mean, we could talk a little bit about, I got Jody here helping me out. Hi, Jody. Hi. After the pre-approval process, people have their own timeline of how long it takes to find a home. Some people connect with us right during, we have this home we want to write an offer on and we need to go fast. We can certainly do that. Other times are a couple of years out before they're thinking about buying or selling a home. And we can help with that as well, just get that plan in place. So whether you are in the process of purchasing this year, which it's a great time to be a buyer, or you're looking out a few years, we can help. A lot of folks think that having terrible credit, I'm never going to save enough money for a down payment. We've heard it all, and we don't have the ability to say no very often. So we will help work with people. We've got credit restoration folks that we work with. We've got down payment options, ways to help with that. So we really just want to reach out to those that are serious about buying a house. If they want to be a buyer, we want to help them. And that's just the true story. Our office is up here in Elk River, but we do service the entire state of Minnesota. I'm also licensed in Wisconsin and North Dakota. So if you have those second homes or cabins or vacation homes that you need pre-approvals for, we can assist with that as well. Just trying to think of some common questions that I get. A lot of people want to know about credit pulls and what that does to a credit score. People are really leery about that. I would say I'd be leery too. Every time you do have a hard inquiry on your credit, it can negatively impact your score. So it's important to not do a whole bunch of credit pulls when you're going through the process, just to help keep your score as high as possible. The higher the score that you start out with, the better, the less chance of it affecting you. So if you've got a 720 credit score and you've got 2 or 3 people pulling your credit, you're probably not going to see that as much as if you had a 620 credit score with 2 or 3 people pulling your credit. So better the score, the less chance of it impacting you would be. When we pull your credit, we pull a tri-merge, which is Equifax, Experian, and TransUnion, and then we take the middle score. And when you look at places like a Credit Karma or those other online credit places that offer you a credit score, I think another common misconception is those scores aren't actually the same as the ones we pull. So when you're pulling your own report, it's called a consumer report. It's great because it's usually got the same accurate data. So if you've got a credit card showing a $1,500 balance, our credit card statement would also show a $1,500 balance, which is perfect. The difference is that your scoring model is based off of a consumer report, and our scoring model is based off a creditor report. So we are looking to extend credit, not just doing it from a consumer perspective. So the scores do vary, sometimes higher, sometimes lower, and I wish I had the $1 million answer for why. I don't know why. I don't know why they're higher, why they're lower, other than that there's just different algorithms. So if you think, oh, my credit score is only 580, because that's what you've looked at it to be, do reach out to a creditor and have your tri-merge credit report pulled. You might be shocked to see that your score isn't as bad as you think it is. And don't be scared if it isn't great, because we can get you to that level to get your pre-approval in place. If you're willing to do the work, we're willing to work with you, certainly. Once you've got your pre-approval, a lot of folks wonder what's next. We stay in touch. Your pre-approval is good for 120 days. After that 120 days, we don't just automatically renew it. We go off of your schedule. So we'll continuously check in to make sure everything is good. You don't have questions. We'll offer you rate updates so that you can see what rates are doing. Rates have shifted in the last few months, so we definitely want to keep in mind if you are pushing your pre-approval limit and rates go up, that you understand what that looks like for your situation. So after that 120 days, we just continuously check in, make sure that you're good, you don't have questions, and then just follow up when you find a house. And when you do find that house, we get involved pretty early on in that process, so that we can get you accurate payment information with desired down payment options. A lot of people don't know what their down payment looks like, and folks are continuously saving. So you might come to me today with a pre-approval and you have 5% down, but you might not find your dream home until January or February, and then maybe you'll have saved up enough to get to 7 or 8% down, which is great. So we just kind of work with you through that process so that you understand what it looks like. Once you have your house that you're ready to make an offer on, we'll provide a property-specific pre-approval letter to your real estate agent. It just says that you, home buyer, are pre-approved for that specific property. It doesn't really disclose any other details other than the type of financing you're doing and whether or not you're contingent on another home selling that you need to sell. And so we'll submit that to the real estate agent, and they'll submit your offer. You'll negotiate back and forth. And of course, if you need to get adjusted payment details or need to know different down payments, we can work with you on that. And then once your offer is accepted, we get to work on our end. And I have my lovely staff and team do what they do best, which is get through the approval process. So the pre-approval process is just getting you ready to make an offer. Once you have an offer accepted, we'll order the title, we'll order the appraisal, we'll make sure that the property is up to standards to lend on and that it's worth what you're paying for. And then we'll take you through the full approval process. At that time, we'll generally ask for updated pay stubs, bank statements. If we've hit a new tax year, perhaps W-2s or tax returns. Just depends on the timing of when we issue that pre-approval versus when you're actually going to make an offer and close. Closings usually take from the time you write the offer until the closing date about 30 days. I will tell you, our team's done them in as quick as 7 business days. It's a little bit of a quick step, and we've got to have all parties on board with getting things to us quickly, but we can get it done. But 30 days is the most common. Sometimes they'll go out 45 or 60 days. It's really going to depend on the seller's and buyer situation. So I had a purchase agreement in August for August for a December closing, and that's what worked for the buyers and sellers. So we're willing to work with whatever needs to happen to get all parties to jump on board and be good with everything. So when we get that offer back accepted from your real estate agent, that is when we look at your locking in options. So we can't lock into an interest rate until you have an offer verbally accepted. So as rates continue to change around during your pre-approval process, it's not meant to panic you. Just understand we can't lock into a rate until you have an accepted offer. So we get that offer back from your real estate agent. We'll send out a detailed email with our next steps, which include locking in your loan. Once we've got it locked in, we'll disclose your interest rate and send out those disclosures. Work with you on getting them electronically signed. Everything nowadays can be done electronically, which is nice. Go through that process to get your electronic disclosures back, update your pay stubs and bank statements, and then send the file off to underwriting. And our goal once we get the disclosures back is to get your file into underwriting within 48 hours. Right now we have same day underwriting turn time. So when we submit that file in the morning, we'll hear back from the underwriter that afternoon with our loan approval. It's generally conditional. So that means that there's conditions that we need to clear up in order to get it clear to close, which is final approval. But oftentimes it's minimal because we do all of the work up front and know what to expect. So then you'll be working with my team, mostly Ashley, our processor, to make sure that we get you through the process really smooth and seamless. Our goal, even if you are closing 30 days or 45 out days, is to get our clear to close as soon as possible, like you're closing in 2 weeks. We want to know if there's going to be any surprises on the file with regards to the property, the buyer, something on credit, something that might have got missed. We want to know as soon as possible. We'll never ever get to the closing day or the week before closing and end up with an issue that we didn't know about. So it's really important that we get all that up front and in place. And then once we get our full approval, our appraisal comes in, our title comes in, we resubmit the file to our underwriter one more time to get that clear to close. Once we are clear to close, we will prepare the closing documents. A lot of folks think that closing is taking a half a day and it needs to be scheduled. And it's a stressful process, but that's really the easy part in the entire process. You just sit there and you sign a bunch of documents. We're usually in and out in an hour or less, and you are the owner of your new home. You get the keys at the closing, and away we go. It's pretty easy. That's my most fun part of the job, is sitting at a closing. I don't really have a role there, but I enjoy watching buyers get excited about getting the keys to their new home. That's what does it for me. So after the closing, we don't go away. So we stay in touch and make sure that you are serviced all the way through your loan. If you have questions about an escrow, or you got something in the mail that doesn't quite make sense, we stay in constant communication. We also have some super cool client events where we keep people up to date. We've got our next one coming up on Monday at Omni Brewing from 6 to 8. We're doing an Oktoberfest, which will be super fun. So that's all our past and current clients. So those of you that have joined us and are watching us, come be current clients so you can come to our event next Monday, or just come. It'll be fun to meet all of you guys live too. So does anybody have any questions at all? I see a few people are following. I want to make sure that I get the most information out to you that you need. Other than that, this is an exciting time to be a buyer. It's an exciting time to be a seller. Real estate's moving fast. It's been an interesting market here in Minnesota and the Twin Cities. Things are good. I think that's all I've got. I talked a little bit faster than I thought. I thought we'd go a full 30 minutes, but we're wrapping it up here. So, hopefully you guys got some good information. We'll continuously do this probably once a month, and I'll post this on my YouTube channel so that you guys can refer back to it if you have a question of, oh, I remember she talked about FHA mortgage insurance, but what was that again? And we'll just talk about the different kinds of loans, and we'll just continuously update and educate our folks out there, because I'm a big fan of education. You can't have too much of it, so that you're in the driver's seat and you know how to navigate through this process. Thanks everybody for joining us. Enjoy the week. Stay warm. It's kind of chilly out here. Have a great day. Thanks.
Yes.